All right. Hey there, everybody. Hope you're having a good trading day so far. Welcome for those of you who are new or don't know me. My name is Allison Ostrander, and I am the Director of Risk Tolerance here at Simpler Trading. And what I like to do, or what I like to try and do when I can, is a $500 challenge each month. And the idea around this challenge is to be able to risk $500 and see how much we can grow it within a month's time frame, but to be able to at the same time teach about capital risk and to show that you don't necessarily need to load the boat, if you will, or to put all that capital into one place, and to kind of teach on a very small amount how you can be mindful of capital risk for whenever you decide to trade a larger count. So I like to do it more as an education standpoint and teaching about risk, right? Starting off with a very small amount, so that way it's, what you might bet going to the tables in Vegas or something like that. It's not, hopefully the mortgage or anything like that that would, eat away at your emotions as well as your bank account. But at the same time, ideally, right, try and grow that amount so that way you can put some money back into your pocket. You can maybe pay for further education. Maybe you'll go ahead and switch that over into the crypto side, right, and start trading that. However you want to do it. So really looking forward to getting started for this in November. Just wanted to hop on the mic and kind of talk a little bit about it now for anyone who's new. And then, of course, we can talk about the market, see where things are trading at, see if there are any trade ideas coming up. I won't be posting any trade ideas for today. I want to start fresh in November. And of course, nicely, the end of the month expiration, right, is this Friday. So we can start that fresh next week and start alerting and looking and alerting those trade ideas there. But, it never hurts to look for something now if you guys want to take it. As always, it's your capital. Do what you think is best for your account. I'm just showing you what I'm choosing to do with mine, and I'm completely aware of the capital risk putting it out there, right? So let me go over here to try and find everything now. One second. There we go. So let's go ahead. I'm just gonna start scanning for some things. One of the indicators I like to look at, for those of you who might not know, is called a divergent bar. And in particular, a bullish divergent bar, because the trend is still bullish, right? I'm not gonna fight this market. Not gonna be the one to call the tops, if you will. So what I like to do is I like to scan for bullish divergent bars, because with that signal, there is a good probability that you might follow through with some sort of higher high compared to today's high within the next 3 bars. So on a daily chart, that of course means the next 3 trading days. On a weekly time frame, the next 3 weeks. Hourly chart, next 3 hours, so on and so forth, right? So let's go ahead. We'll scan this for today. I haven't done that yet. So you can see brand new scan. And the first one that pops up, which is always really fun and interesting to do, is Apple. And the reason why I say this one's fun and interesting to do is because Apple, of course, is going into earnings. So let me go ahead and see if I can share my other chart really quickly. Maybe I'll just do a display capture. That would probably be a bit easier. There we go. Bring my camera forward. There we are. So here's the intraday charts for SPX, right? This is starting to go back into support. It was building up a nice squeeze here. For those of you who don't know, a squeeze is basically a signal where it starts to basically compress and it builds up energy. And typically when that starts to print, it means that it will be seeing a greater than anticipated move, either in one direction or the other. So we do have this printing on the 30-minute chart. So, it's a 30-minute time frame. But it will be interesting to see whether or not that prints into the close, if we can maintain support here, if we're going to break it and sell off right into this last hour of market. So we'll see how the market holds up. Now, overall, let me move over my daily chart here. right? So with SPX, well, we're starting to erase that bullish divergent bar, right? We're basically saw a beautiful run up from these lows back here, broke resistance levels. We're going back into a bullish trend with the simple moving averages, but we are starting to stall. And part of that reason, of course, is because we are up by 4,600, right? Which is a strong psychological level. So the question is whether or not this level is going to hold as resistance and maybe we get a bit more consolidation, or, right, do we consolidate at this current level and move on into support? And that's basically what we could see here is just chop basically in this 50-point range is what I'm anticipating between 4,600 and 4,550. And if it does hang out in that level, what typically happens is the 10-period simple, which is this short dotted line here, it will come up to meet the price. And if that can hold support, especially if it makes a bullish divergent bar, which is what this bar and this bar is here, there's that good probability it will follow it through with that higher high and continue back in the bullish trend. So for that reason, right, that is why I'm still, even though we're pulling back today, one, shouldn't be too surprising, but two, that's still why longer term, right, I'm keeping with a bullish sentiment in my account until I see things really start to break and fall apart again. And just to be clear on that too, on the weekly chart, right, the weekly chart, beautiful run since these pandemic lows, right, went straight into a bullish trend once again. We've taken a little bit more of a pause here, but we haven't broken the pattern, right? We're still holding the 30-period simple as support. We're still in a bullish formation. And if anything, this nice breather has allowed some of our other indicators like momentum here to reset itself. And what happens when that resets? Well, it builds up going back into a new trend, whether it's to continue this bullish trend, right? Or to break down into a bearish one. But right now, if we take a look at all our other indicators to kind of determine which way that might go, it's pointing to the bullish side, right? So once again, we're not near support, so we could certainly pull back, which is certainly what we're trying to do now. But I still like the idea longer term that this market's to the upside. And, you know, for those of you who have been on this, right, this year, it's been a very choppy year. There have been a lot of symbols that have been consolidating, especially on the weekly time frame. I mean, for those of you who have been following along with me for a while, especially at Simpler Trading, that's exactly what Tesla was, right? Tesla was in Chop City for most of this year. And on the weekly chart, that becomes very apparent, right? Every time it tested the weekly ATR trailing stop, I mentioned this was the buy-in area, look to buy in, especially when it printed that true low back here. And if you did, you're very happy today. But it took a while to break out of this pattern, right? We kept hitting price resistance for a while and stalling. So it's not to say we can't chop for a bit. But if the pattern maintains itself, right? If it can maintain or go back into this bullish trend, which is what Tesla did, I'm still playing for a break in this consolidation to the upside. So let's talk about Apple. That was the first one that popped up on this little watch list here. Yes, Keeg, hope I said that properly. This is the Thinkorswim platform. So personally, I love Thinkorswim for charting. I think it's one of the best platforms out there. It, of course, allows for a lot of my indicators, which is why I'm pretty happy about it. But to be quite frank, I will execute both out of this platform and Tastyworks. I think Tastyworks is a lot easier to use, especially if you're a newer trader. The platform itself is pretty simple, pretty user-friendly. Thinkorswim is a bit more complicated to use, especially if you're a newer trader. So that's my 2 cents there. But in terms of charting, Thinkorswim, I think, is number one. And then Tastyworks is coming close. I know they're building up their charting game, but they're not quite there yet, right? They're coming up. But over to Apple now. So the reason why I really like Apple is because not too long ago, it printed on the weekly chart this true low signal. And for those of you who don't know what this indicator is, it's one that I've created and I've been back testing for a little while now. And the idea behind it is Ragi, for those of you who know Ragi, at Simpler Trading, she is a futures trader, one of the best macro and futures trader I have ever met. And she always has said this little phrase. I mean, she has a lot of phrases, but one of the things that she says is traders are the only people that don't like to buy things at discount. And, you know, I was thinking about it. It finally sunk in, and I was like, you know what? She's right. Because typically when I buy, I like to already be in that bullish trend, right? I like to go to the upside. I like that confirmation. And in reality, it's not always the best time to buy in, certainly not at that quote unquote discount price. So then I start to, you know, break down like, well, how can I try and identify when a true low is actually appearing for that potential opportunity to buy in long, whether that's buying shares, right? Buying a leap, or buying just even a few months out and trying to play the longer term trend and break out to the upside. And so that's how this true low indicator became to be, right? So let's just go back and I'll show you the example of how this true low indicator has worked. So recently we printed this back here as it's held support. It's been holding quite nicely. The trend itself is of course overall bullish. Now anything can happen around earnings. You guys know that. It can completely evaporate a move. So take this for what you will. It is a slight lotto trade. But the idea of course is that if we can hold these levels, we might be able to get that pop from earnings. And ideally, right, that's the catalyst for us to go back into the bullish trend, maybe for this low compression squeeze to fire, right, and see us move to the upside. The prior true low was back here on the weekly chart, at least was back here in March. You can see there, right, similar situation. We consolidated, bounced up, had a little bit of a pullback into support again, but ultimately, right, that trend went to the upside longer term. Here, right, back here in June of 2019 was another true low signal, right? That one ended up holding, seeing a bit of consolidation. Ultimately, right, continued with the bullish trend. Even if you held through that pullback, of course, the long-term trend, right, if that was a share buy-in, it worked out beautifully. Here, you did have it print a couple of times, right, as it was selling off. Once it started to confirm that it was trying to hold, and for me personally, I probably would have even waited until it started to break resistance. But once it starts to do that, right, that's when you can start to take into consideration that signal to play it back to the upside. So that's another thing I really like about this signal is you don't necessarily have to get in right when this, you know, I like to get in on the pink triangle. You don't necessarily have to get in right at that level. It makes for a great typically discount buy, and usually that nice follow through almost immediately to the upside. But sometimes, especially if you're going into a bearish pattern like this and you're getting the signal to pop up, it's nice to get that confirmation, right? It's nice to confirm, okay, is it stalling out here? Are we starting to see a reversal in trend to where this is the discount? And so you can kind of wait a little bit for it to print, for it to get that confirmation, and then still look to buy in shares around this level to play it long term, or buy the leap at this level, right, to play longer term to the upside. So the fact that it's printing it recently, and of course we haven't really seen the effect of this trend yet, it's like, ooh, that might be a fun lotto trade. When we go over to the daily chart, now it started to erase with the market pullback. Earlier today it was making a bullish divergent bar, and that can sometimes be fun to trade through an earnings announcement. As you get, right, that's what we're actually scanning for. Let me just close that for a second, right? So that's what we are scanning for here on our Thinkorswim scan. So if we scan this again, it's not going to appear, right? Totally, actually half of the things disappeared, so it should probably start fresh. This market pullback's bringing some stuff with it, right? But yeah, so if it prints, right, the possibility of that higher high is there. You could potentially play for that higher high with the idea it's going to break 150. I don't know if it's going to break 150 before earnings. It kind of seems like it's probably going to sit there until the announcement is my best guess here, because it keeps hitting this resistance. Even though we've intraday traded above that level a few times, all the opens and closes of these bars have been right below it. So it's been respecting that level. At the same time though, it's not breaking the 10, right? Which is, this 148 level, if you will. It's holding that quite nicely as support. The trend is turning bullish. It also printed true lows here on the daily chart that you could take into consideration. I played these true lows last time on the daily chart, longer term, and it worked out quite nicely. So, there are quite a few signals saying that this might be a fun trade. Now, if you do it, right, if I did it, personally, I would be doing a very small capital amount, because I need to understand that earnings could completely evaporate whatever signals are setting up, and the market will do it at once, right? Apple will do it at once. It really depends on the reaction people have around whatever announcement and guidance they have in that news. So I need to be prepared for that, which means I should still look at this as a slight lotto trade and do a smaller capital risk than I normally would. That way, if it does pull back into support levels, right, I can look to build into the trade if it makes sense. If it completely falls apart, then it's a smaller capital risk than I would normally, be trying to make up. So it's not my full amount that like I'd normally do. And of course, if it moves in my favor, well, then I have a little bit in the game and I can just play that or, still build into it on a pullback if I'm trying to play the long-term trend. With that being said, let me pull up Apple here. So with Apple, I would probably go out to at least January expiration. And I know that seems a little far away, right? But the reason why is because on these true low signals, especially on the weekly chart, and there's that bullish DB, right? It's trying to print. Because of the true low signal being on the weekly chart, I would still like to ultimately give myself time for that to try and work out, which means I should probably build at least a little bit of time for a potential pullback into support, right? Build some time to allow for consolidation if that's the case. And then of course, try and build some time for the move higher. So, talking that through, maybe I should go out further to March or April, right? You could do that. But for this trade in particular, I'd like to keep it more as a long call. And I will probably start actually out of the money. Now, typically on long calls, when I can, I try and go for the 0.7 delta, which currently is around the 140 strike. That's a 12.57 cost basis. The reason why is because it already has intrinsic value built into it at this level. If I'm entering at a support, where I think it's going to hold and it moves higher, the delta itself being 0.7 means basically for every dollar move the underlying makes, my option price should basically increase by 70 cents, right? So that's, of course, going to lead to a nice profit if I get the point move I'm looking for. But because this is an earnings trade, I am giving myself a lot of time. So I will be affected some by theta decay, but as long as it doesn't fall apart, it shouldn't be too drastic. And of course, to build into that capital amount, I prefer to go with something like the 55, even the 60 strike. And the reason why, right, first of all, great open interest at those levels. But two, it's a lot less expensive than going in at $12, right? $12 on one contract, for those of you who don't know, is going to be about $1,255. Versus if I do the 160 strike, it's only $283, so it's about $283, right? So a lot less to be able to make up if Apple just completely tanks against me. Then, right, let's go back to the charts. Well, we know the prior highs ended up being around 155 to 157. So if we do go back up to at least test those levels, I know my strike is pretty close to being in the money, right? It should be right at the money. If we're able to move above, right, if we have one of these moves like we saw in Tesla, where we started to really trend higher after the earnings, if we saw the move like we saw in Google today, right, where it's seen a nice move to the upside, or even Microsoft, right, then it could exceed the highs that we were at, and in turn get us to or potentially even above 60 to where the strike is now in the money. So I kind of like that idea for a lot of trade because, it, like I said, it gives you 86 days. You have all of November, all of December, and part of January to try and sit, manage it, hold on to it, do what you will. And then, of course, if Apple can follow through with its FANG brothers and sisters out there, maybe we'll get that pop-up or that positive announcement and that move to allow for the higher high. And with that true low being there, that's why I kind of like the idea of a lot of trade on this one more than I did necessarily on like Google, for example, right? Or on Tesla, which already started to move prior to the announcement, if you will. So just my 2 cents there. Let me rescan this now. And we'll take a look, and let me move that display capture back. But yeah, so I think, if you wanted a fun lotto trade, that might be one to consider. If you want to give yourself time, there's nothing wrong with that. Or if you want it to even do a smaller capital amount, maybe bring it in some, right? If you think the move's going to happen a little bit more quickly, but then you keep it like a vertical spread, right? This is the 155, 160. It's only an 86-cent cost basis. So this is the kind of stuff that we'll be looking for in the $500 challenge, right? Things that are relatively inexpensive, are in line with targets that we might have to the upside, right? Retesting or getting slightly above the prior highs, and still allow for an excellent risk versus reward scenario, right? 416 profit versus 84 cents risk, and we have about a month to try and get up to those levels. So, those are the trades that I would be, looking at and considering here. I wouldn't do a long call out of the money in November. I mean, technically you can if you want to. You do what you think is best for you. The reason why I'm personally would go out further to January is because November's expiration is the next monthly, right? So as soon as this earnings announcement happens, if it's flat, if it's negative in any way, the theta decay is more than likely going to rip out of these trades, if you will. And so even though it's not much capital, I still don't really want to lose it. And if I do want that potential, right, of what we're seeing with these Googles and Teslas seeing really great reactions after their earnings announcement, I kind of want that unlimited profit potential that a long call gives me that flexibility of. So hope that kind of helps you out. Let me go back to the scan here. Rescanning, Apple is back on, of course. Another reason why I like doing these divergent bar trades into the close is because, right, you want to make sure that they print. You don't want to jump in it too soon and have it completely erased by the end of the day. Let's go over. TXN is also printing a setup potentially. Oh, TXN gapped way down on earnings. Now what's interesting here though is it's right in line with this price support level. It's probably a bit cleaner looking on the weekly chart. Yeah. So it's right back at price support here. Notice the Bollinger Bands aren't really flaring open, so maybe it will try and hold up, but I'm not really interested in this one. I like it to at least be a bit more in line with the pattern, and it's not like it's printing the true low here that says like, hey, this is, it's going to bounce, I swear. So rather let that digest. Not like I'm beyond at all. Not if I want to stay bullish at least. TWLO, that one looks like it disappeared on us. PCAR, so this one, so here's my reason that I personally am not going to trade this one. Now it is around an earnings announcement, right? It's trying to maintain, so maybe that gives it a little bit of more flexibility to the upside. The reason why I don't like this though is because it's been trending for a while now below the 100-period simple. And for those of you who don't track or maybe once again newer to trading, whenever you trend for a while below the 100-period simple moving average and you start to try and retrace back above it, it can very easily fake out traders, right? I have seen it plenty of times where it will dip just a little bit. Like back here, for example, we didn't even trend that long below it, right? But it tried to get back above this level, was not able to hold it, and then reversed back down. And so right now, right, we're trying to break above it, but we're not really stair-stepping strongly to the upside. We're just kind of hanging out, which is usually not a good sign that we want to see. When we pair that with exhaustion on momentum, we're canceling out of our bullish signal, saying that we're going to test resistance, right? It's now a pullback signal, saying that we're moving into support. And if we break support, it turns bearish at that point. That's looking weak to me. It does technically have the bullish divergent bars, but when it looks like this, it's like, I rather look at something else. Something a little bit more agreement. Monster's not looking too hot. Shop is another interesting one. This could be like another play. I like Apple a bit better. I think it's a little bit stronger in the chart pattern. But this too has been printing true lows. It keeps going up into resistance and then kind of stalling there and reversing. It's actually getting another true low signal now, right before their earnings announcement. On the weekly chart, so this is what I'm a little bit curious about, and this is why I like Apple over Shop, if you will, because it too printed the true low signal on the weekly chart. It's holding up pretty well here on the trend itself, right? But I don't like how it's trading down here. So Shop is another one you could consider. It's obviously a lot more expensive than Apple. Another reason I'm sticking more with Apple than Shop. But it too has had a nice bit of consolidation, a great reset. It's printing that squeeze again. And then similar situation, I mean, on the weekly chart, when it prints these true low signals, it has followed through quite nicely in the past. Here, for example, it printed, let's say you got in at the high around 1130. It still went up to 1640, right? Back here, when it printed here, let's say you got in the high of that bar, right? The worst place you could. So around 950, 960, you still had a move up to 1499, 1500, right? So because of that, right, overall, not a bad setup. Could look at it for that move higher, certainly. But it's hanging out here. And what I don't like is on the daily chart, right, it's a little bit weaker. We weren't quite, here's another great example of a fake out, right? We trended a little bit below the 100 period simple. The simple moving average started to turn bearish. We bounced up, tried to hold above this level, weren't quite able to do so, and then we gave it back up again into currently now what we're trying to hold as support once more. So, you know, it's anything can happen around earnings, so you still got to treat it like a true lotto trade for that reason. But if you think Shop's gonna, you know, work out a bit better than Apple, or you want to play both, then you might consider that one too. Over to Eat now. Here we go. Over to Eat. Yeah, no, Eat looks awful. And then ODFL. Well, that doesn't look bad. So ODFL, very strong move from the earnings announcement itself, right? We went right down into support levels. They ended up holding. We're bouncing back up. In turn, of course, we're making that bullish divergent bar off support. Bollinger Bands are opening up. Momentum is certainly high. We've actually started to adjust the axis higher than the last few bars. So when that happens, basically what that means, let me zoom in so you have a clearer picture of this. So a couple bars ago, right back here, momentum was building up, but this was the top of the axis. This was a level that we kept hitting in the past and stalling out at, which means, you know, that's where momentum was getting high, and that's potential exhaustion levels. When you start to get a really strong run where it adjusts that axis, meaning it keeps making green bars and basically pushes that level higher, it can keep doing that until you start to get one or a couple red bars here to confirm that this is the new top of the axis, if you will. So the fact that we've started to adjust this axis higher, even though the bars look high, technically for myself, I need a red bar to start to appear for me to be concerned. We do have some top hats, which is a similar signal, right, to show exhaustion. But for me personally, until I start to see those red bars, this could keep going up if it wants to. The high it's looking to get back above is 329.25 within the next couple days. Ideally, we'll see a move back above that level of some sort. So let me go to the option chain here. So ODFL is not as big of a trader, of course, as, you know, some of the other symbols out there. But that's okay. I personally don't mind trading lower open interest. Now, I might not alert lower open interest because I do understand that, you know, with alerted trades, at least from my side of things, right, when I have a group of people following along with me, it's very easy to, when it's low like this, right, when there's not a lot of volume, not a lot of people trading it, it's very easy to start to manipulate that price and accidentally, right, and adjust it. And so what I don't want to have happen is I get in at a good price, I send out the alert, I'll be all scramble to jump in, and then it adjusted higher to where it's probably a point, you know, where I might be taking a profit and y'all are still trying to jump in. So for that reason, you know, you could still look to take it yourself, just be mindful. Now the bid and ask isn't too bad, even though this has low open interest, right? It's about $1.90, $2 on the 330. The 340 strikes about $1.70, which is pretty good. On some of these symbols where they don't have much volume, you can get some really crazy spreads between the bid and ask. So with that being said, right, we're anticipating a move, basically about a 4 or 5 point move back to the upside. So one way we could trade this is with a simple vertical spread. Right, we jump into something at the money here, like the 330, 340. We look for the 5 point move, and it looks like we could probably take about $1 profit from that if we were to see it. The reason why I came up with that $1 profit is because if we were to see this move within the next couple days, right, a 10 point move to the upside would be worth about $5.35, right? Because as you can see here, when we adjust our option strikes higher by 10 points, that's how much that current spread is worth. So if the underlying price itself moves up 10 points, that's how much I can imagine, right, this current 333.40 trade will be worth. So of course, if we take half of 10 and look at it to 5, which is the first target, of course, with this bar, that's about $1 profit, right? Because the difference between these two is $2. You take half of that, it's $1. So you could look at something like that if you wanted to play ODFL back for this higher high, because unlike Apple, right, unlike Shop, this earnings has already happened. So the news has already started to be digested, right? The news took the price down into support. People are like, wait a minute, this news doesn't look too bad. Or people are like, oh my God, this is a discount. They bought back in, and it shot the price back up to where it's at. So that could be another trade if you wanted to consider it. Now, one thing to remember, guys, on the Apple one, it is technically tomorrow after market close. So if you do jump into that long call, right, it is making a bullish divergent bar. And let's say tomorrow we get one of those pops up into the announcement, right? People are buying in before the news and it follows through with that higher high immediately tomorrow. And you like the profit that you see, never hurt to take it off the table, especially if you're concerned that earnings might erase that profit for you. But technically that news is going to be after market tomorrow. So you still have to sit through the day, or if you want to wait until tomorrow to jump into it, you could also look to do that as well. So to be quite honest, I'm not really seeing much I personally want to trade here right now. Let me scan somewhere else really quickly. But I almost want to hold my capital for the Apple, for like the Apple trade, because it's not too expensive, given that it's out in January, and certainly with the true low signals and stuff, it might make for a little bit of a, I don't know, cleaner lotto, if you want to call it that. So, okay, quite a few more popped up on the NASDAQ. So guys, just to show you, let me go over here to OBS. So here, right, here's the scan that I'm doing on my other screen, and it's showing a whole bunch for NDX. And of course the Qs, right, NDX was quite up today, so it kind of makes sense that we're seeing this up. So let's go through some of these. TXM we already went through, but not MU, I don't believe. Nah, don't like MU. KHC, nope. AMAT. AMAT's in consolidation. I don't know if I'd take the daily trade, but I do want to see the weekly chart. So weekly chart, see, this is exactly what I mean, guys, by consolidation this year. So for AMAT, right, we had a good run up that continued from last year into this year. And then we hit these highs of around 145 and it stalled, right? And then since, you could say, April, we have just been trading in a 20-point range, basically. Had a little bit of a lower dip here, but overall, right, it's been between 125 and 145, and that's where we continue to trade. So one trade idea, because earnings is still a ways away if we have those weekly expirations for AMAT. Oh, sorry guys, I did not have my, there you go. You're probably like, well, what is she talking about? I only see the list. So here's that run up I mentioned, right? This is on a weekly chart. Here's the high that we hit in April at 145. Here are the lows around 125. Here's that slight dip below it, but ultimately, right, there was the chop in that range. And we're still just in that consolidation. So this has been like a lot of symbols this year. And of course, the question remains, which way is it going to break out of this chop? And a lot of symbols, right, that we've seen at least, a lot have tried to break to the upside. So maybe Applied Materials can follow through with that. Certainly, all of this is still more in line with consolidation. So with where it's trading at 133, if you wanted a trade idea for today, one might be to go out. Oh, perfect. So looks like the anticipated earnings is the 11th. I think that's still up in the air. Usually on Thinkorswim, when they confirm the date, it's like locked in, and I don't see it like that yet. But either way, it's not anticipated to be next week, right? That's the good news. So in that case, that means that theta decay and premium should work out a bit more in our favor. And if it doesn't look like there's much premium here, but the idea, ideally I'd look to do is something along the lines of, I know this is a little bit away from the mid, but something along the lines of an iron fly. Now, I don't know if it will make sense to go out this far. It's not bad premium. So it's about a 495 credit, 505 risk, right? The idea is that we're going to hang out around the midpoint of this range, around these moving averages, which is at 134, 135, right? That puts us in between 145 as the highs and 125, which has been the recent lows. And the idea is that we'll chop in that range and we can lock in a profit that way, right? That basically we aren't going to move outside. And so the premium that we have here will decay away to where we can take it as a profit for next week. So that could be a trade idea on EMAT. Otherwise, if I'm trying to play this weekly squeeze setup, you know, looking at this chart pattern now, maybe it gets run into earnings, but it's not looking too good on the daily chart, right? Which is why I like the iron fly idea. But if you know, are really concerned about that, look to set your profit a bit more quickly and take it off the table, especially if it looks like it's breaking, I'd say 140, right? If it's really breaking that, then you might just close out of it and take care of it. But otherwise, the idea is that you sit through it over the weekend, right? Go into early next week, see how that premium looks. And if we're hanging out around 135, ideally you should be able to close out for some sort of profit. So that's AMAT. Let me go here. Okay. So let's keep going. JD, I think, is a Chinese symbol. I don't really want to trade Chinese stocks right now. They've been a little bit too volatile in the last couple of years with news that I'm just like, I'm over that. No thanks. MCHP, nope, not seeing anything there. MRVL, oh, absolutely not. I don't know why that popped up on the list. Oh, that's because I was dyslexic. MRVL, there we go. So that actually doesn't look too bad. We do have back-to-back divergent bars, so once again, could be that sign of chop, right? Kind of saw that back here. Bollinger Bands are pointed up, but they're not strongly flaring open. I do like the bullish sentiment. Technically, this is still bullish, but the squeeze is fired, so I think I usually like something with squeezes building up. It usually means I can see a bit more of a move. QCOM, not seeing it. So this is interesting too. Now, this still has earnings coming up, but this might, if you wanted to run into earnings trade, right, this might be the day for your re-entry if you missed the opportunity back here whenever the squeeze was still in play, right, with the bullish signal and the compound breakout tool and support holding. If you didn't jump in there, right, this might be the time to do so. Now, the higher high that we're looking to get above is 52.30, so it's really not that far away. The idea for this entry would be more that we're going to continue to stair step higher into that announcement. So let's take a look at EXC. So it only has the monthly expirations. This is not a trade, mind you. I would hold through the announcement. The idea is that we just trend higher to hold into the announcement. Theta decay should not be an issue until after the news, right? Because it's uncertain about which way it's going to go. So if anything, it's building that value up into these option strikes more than it normally would. And then once that news occurs, it will wipe out what it needs to wipe out, and the intrinsic value for the strikes that it has, the intrinsic value, will stay in place. With that in mind, though, great open interest here. And you could jump right in at the 50 strike. It's about a 228 cost basis, so it actually holds pretty much the majority of the intrinsic value here. It only has a tiny bit of extrinsic value, so I already like that. Now it goes straight into 5-point strike increments. So for me personally, for those of you who are familiar with my profit recycling strategy, it's not gonna, you know, work for me there more than likely. However, if we could get the higher high, right, if we could go up towards maybe 53 or more, might allow for a quick dollar profit on this trade as we stair step up into the announcement. So EXC might be an interesting one to take. The bid and ask is only 10 cents, so it's very narrow. I would not go with the 55 strike, even though it's out of the money, right? So theta decay technically shouldn't be an issue because it's after earnings. Because it's 5 points away, and because of, you know, this daily range, which is around maybe $1, right, if we're lucky, I do not have the faith that it will get all the way up to 55 prior to earnings for us to be able to take a profit on that. So if you do jump into something, I'd personally probably consider the 50 strike. And then, like I said, for that trade, I would not hold it through earnings, just into the announcement. So I'm probably going to end the stream here. Hopefully that gave you guys a couple of trade ideas to consider, right? The Apple and Shop idea, if that's something you want to hold through the announcement, or even with just the idea it might pop up tomorrow, you take the quick profit before the news. EXC here with that idea, AMAT with the consolidating idea to take into consideration. But overall, right, we will be looking at trades for this $500 challenge starting next week. We will be keeping our risks small, right? The idea is to show you how you can be mindful of your capital risk, even starting with a very small amount. And then once you have that risk and kind of that capital, and more importantly, that emotion, right, under control, because when you trade real money, it is completely different than trading paper money, right? Because you actually have that money out there. So you can be as calm and cool as a Jedi trading in paper trading and have no issue. But then once that real money goes in, it is so easy to turn to that dark side of trading. And so part of the reason I did this $500 challenge is to exactly show you how you can be mindful of that risk, be mindful of that dark side and emotion, but doing so in a very small capital amount. So once you get confident in your trading plan and what you're doing, you can build up what you're doing in this small account and have it fit whatever size account you're doing, whether it's 5,000, 25,000, 100,000, whatever it is for you, doesn't matter. You can build up into that using the strategies that you find here, or figuring out what your risk tolerance is here and then applying it to your bigger accounts. So thanks guys for joining me today. It was a lot of fun. I'm really looking forward to starting with this next week. I will be back on the mic probably on Wednesdays, a lot more to do this. And then of course, the trade alerts will be sent out to my simpler trading folks first, of course, but otherwise I'll be tweeting those out to say hop onto Twitch. I usually sign on to Twitch and leave a little alert box there. I'm usually not on the mic for the alerts themselves unless the kids are calm, right? But otherwise, I'll try and hop on the mic on Wednesdays and we'll give these updates. We'll go over the trades that we're in. We'll look for some new trade ideas and then we'll go from there. But thanks for joining me. I hope you guys have a great rest of your day. As always, for my Star Wars fans out there, may the trade be with you, and I look forward to talking with y'all next week. Bye.